It was a wonderful Friday, October 9th, and we were all happy sitting on our gains, and suddenly something terrible happened. And the Nasdaq crashed 3% and more, and the S&P nearly 3%. What was happening this Friday? And what does it all mean for the week ahead this Monday? So I want to give you a quick summary. What happened there? Why Trump announced these crazy 100% tariffs on China, the US most important trading partner, and what does it all mean for Tesla stock and for the market at large for all our other stocks? So first, a little recap what actually happened, and then we look into the exact scenario. So China decided last week to announce new and very tight controls on exports of the rare earths, which are basically, it's stuff you find in the earth, mostly metals, and these metals are very rare. That's there, hence the name. And that means they're very valuable and they're being used in technology, in chips, in actuators for robots, but also in a lot of defense products, which makes them very, very fickle and difficult as a export control mechanism. Because China, over the last decade or 2 decades, had a very deliberate plan to maximize their production, their mining of these rare earths, because China is sitting on a lot of them and is now supplying over 70% of all rare earths to the world. And when you consider this goes into rockets, it goes into chips, it goes into all kinds of things, it's a little bit disturbing, and it gives China tremendous power. It's a little bit similar to NVDA and the most advanced AI chips that the United States manufactures and controls. And the United States put export restrictions on these chips to China, which is part of the reason why China got so aggressive about these things. And basically Xi Jinping or whoever, we don't know who, actually pulls the strings over there, but Xi has a say in it. China basically said, well, if you restrict the chips and all kinds of stuff to China, then we are going to use this big lever of rare earths and say anyone who wants rare earths from China now has to get approval from a centralized committee of rare earths. And they added 5 more to it: holmium, erbium, thulium, europium, and ytterbium to the earlier 7. And now you need export licenses to get this stuff out of China. So if you're a US defense contractor, if you're a European defense contractor, right, you're building cruise missiles or something, and you need these things, you need to get approval by the Chinese Communist Party, which neither Europe nor the United States likes. And what that all means is we have a problem that came as a surprise, and Trump seemingly got a little annoyed by it and announced on Friday he's going to put, in response to that, 100% tariffs on everything from China starting November 1st, which is very soon. Now, of course, 100% tariffs on the largest trading partner, on China, when China's economy actually depends to a large extent on exports to the United States, basically means complete trade war. A threat of 100% tariffs on all goods from China is the equivalent of threatening China to shutting down everything between the US and China. And that is why the market crashed a little bit. It got really nervous. And of course, it's to some extent just a threat, because the United States couldn't even withstand this. Neither could China. So it's basically Trump throwing the hat in the ring and saying, no to your rare earth exports. If you do that, I'm pulling the plug. It's going to be very bad for the United States, but probably even worse for China. That's why it's called a trade war. Hey, creating these videos is a lot of work. Please like and subscribe. It really helps out the channel. Now let's get back to the video. So this is all very concerning, of course, but we need to be rational, take a step back and think about what that actually means and what the most likely outcome here is, looking at the markets, because we had similar theater before. Earlier this year in April, I told you guys, don't get nervous. There's a V-shaped recovery. This is fake news, because there is no possible scenario where this actually happens. And guess what happened? You know what happened. I was right. The market rallied and we were back up exactly to where we belong. So we can take a closer look here to the stock market just to recap what actually happened, right? Here we have Tesla, but let's go for a second to the Nasdaq, or maybe the S&P, even better, and look at year to date. And of course, here is exactly what happened earlier this year when on Liberation Day, April 1st, 2nd, the market totally crashed, right? Went down from 5,670 all the way to, 4,982, which is over 10% in a very short period of time, in less than a week. Total crash, total correction. And then we had this giant V-shaped recovery, and now we're here. We had 6,753, so we are basically, $1,000 or more than $1,000, over 24% or something up from that point before the drop. So the question is, number one, will we see the same thing repeat? Will we see such a giant drop? Look at this, right? This is a big drop from exactly 5,670 to 4,982. And so that the equivalent would be here to dropping basically to 5,700, whatever, 1,500. That would be nasty. And that would drag also Tesla and all the other stocks down exactly with their beta. If you're a big fan of any specific stock, a lot of people are Tesla fans saying, no, Tesla is so strong and so amazing that it will withstand this and will drop less than the beta suggests. That's not true, right? That is absolutely the opposite of true. Everyone will drop exactly at their beta in situations like that because the market does not discern between different stocks in a situation like that. So we have to now answer the question, will this actually happen? Are we looking at the beginning of a giant drop here? This is Friday. Will this just continue and drag us down? So we dropped 2.71%. If we actually drop 12% or something, we have 5 times that to go. That would be pretty bad next week. Okay, that is what we have to address. Maybe we have to address something else in this video. So before we go there to have a full picture of the actual fundamentals of this trade war, let's also take a look at Europe, because Europe plays a central role, a very central role in this, even though they are not as outspoken about these things. So Europe had a few reactions already over the last 24 or 48 hours. The EU is very concerned by Chinese rare earth export controls, says the European Commission spokesperson Olaf Gill, and criticized China's sweeping new controls. Germany says China rare earths export curbs are of great concern, and the German officials labeled the restrictions as alarming, which is pretty aggressive language for Europeans, by the way. Concern of the Commission regarding China's announcements to introduce sweeping controls. EU Commission statement expressing study and concern over the changes, and the EU firms brace for more shutdowns due to China rare earth controls. EU companies report bottlenecks and slow license approvals post-summit. They are very concerned, and we hear from European leaders also they are already on hold, so they can't get their rare earths. Brussels in general is concerned by new Chinese rare earths. So long story short, the Europeans, even though they're not saying much like Trump or not reacting yet, don't forget, there was not much time to react yet. They're already calling for coordination with the United States to respond to these rare earth controls. So the United States and Europe are pretty much in the same boat here. They're in a very similar position. They share a lot of defense and technology companies, and they're both equally hit by these rare earth controls. And so now the question is, what's the role of Europe here? And the role of Europe is very, very important. I listed you guys here very quickly how important the United States is for China's total exports as a share. And the United States represents roughly 15%, 500 billion, of exports from China into the world. So if the United States shuts down with 100% tariffs, China immediately loses 15% of its exports, which in itself is already not good for China. That would lead to political unrest if that is a sustained situation over 4 weeks or something. Now, if you look at Europe, Europe is significantly larger even than the United States, and it's the biggest partner of China in the world. US is actually very close with East Asia, similar size, but the United States is the most coordinated single government. So European Union is bigger and more important to China, but the United States is also very significant and can act more decisively because it's one president. So if they would join forces, which they are very likely going to do here behind the scenes, they have exactly the same interests, and they are here actually very close together, they would represent 34 to 36% of China's total exports. And I tell you one thing, if there's anything shutting down on that level, China is toast within 4 weeks. Okay, so that's the situation. I call it inappropriately a Mexican standoff that we have here. Of course, it's not a Mexican standoff, it's a Chinese standoff. But you know what I mean. What is a Mexican standoff? It basically means both sides are locked, right? They are threatening each other, but they can't do much because everyone dies. Let me explain quickly why. So Europe and the United States, in this new situation, would become, if they don't do anything, would become dependent on Chinese approval for every rare earth application, every rare earth product, which includes a lot of defense. And if you are in a military competitive situation with China, you cannot be dependent on China for approving your defense. Very bad. Plus the AI race, very dependent too on China, plus the entire European manufacturing and high-tech industry. Not a good situation, and neither Europe nor the United States can allow China to get away with this. They cannot be in a situation where every rare earth export has to be approved by the Chinese Communist Party. So that's the situation. It's a no-no. Now, if the US follows through and maybe the European Union joins to some extent, and they're putting tariffs on China, the risk for the United States, of course, is also significant just because of the tariffs. Right? If you put 100% tariffs on China, imagine you're a US company and you're manufacturing anything. Now your China-dependent supply chain gets destroyed. Not acceptable. You're doing t-shirts, you're doing coffee cups, you're doing computer chips, you're doing robots. Everyone is heavily dependent on China. If Trump puts these tariffs in place, you basically say goodbye to your supply chain. Number one, because you can't afford it anymore. But number two, even if you can, the supply chain breaks down because the supplier in China goes bankrupt, even if you remain as their last client because they lack all the other clients. So big problem for the United States. Supply chain breakdown on a mass scale and inflation, because now you have to go somewhere else or pay the 100% tariffs. Then you really have some inflation problem here. For China, on the other side, that's why it's a Mexican standoff. China can also not at all survive a tariff attack like that from the United States and maybe in conjunction with Europe. There are some people who project if this goes into place, the United States gets hit with inflation, breakdowns, and then enters a recession eventually after 4, 6, 8 weeks. But China gets hit even harder. Millions of people get unemployed within 4 weeks. Thousands of companies go bankrupt, out of business, on razor-thin margins, suddenly you can't sell anymore. It would have a massive impact on the Chinese economy, and it would be also very nasty for the US stock market and the economy. So that is kind of the situation. It's pretty severe. The good news is that we know Trump is a fan of the stock market. We have seen it last time. Trump does not have the guts to see this through. Fortunately, I don't think it would be smart to see it through. And China couldn't even see it through, in my opinion, right? So on both sides, we know this is more a mutual threatening situation than actual reality. It's very unlikely that these things go into full effect. Maybe the Chinese planned to have it go in full effect, but if you ask me, I don't think so. I think it was a chess move on the Chinese side with the intent to take it back and use it as a bargaining chip. Trump got really mad, put the 100% tariffs in place or threatens them by November 1st, obviously does not intend to actually do that. But now we have a standoff. Trump demands, take the stuff back, or I'm putting in the tariffs. And China says, we don't want to put it back and put on the tariffs. Good luck. Then we all die. The big question here is, will it be resolved before November, this whole thing, for us from a trading perspective? So if we take a step back, I want to just comment on this before we go into trading and markets and stocks, because it's always important to understand the underlying base reality. On a geostrategic level, what is Europe, the United States, and China actually going to do? What is the most likely outcome here? And a lot of people have a very simplistic perspective. They're China fans and US critics. What's the other way around? Maybe you're a US fan and China critic. It doesn't matter. Your emotions don't matter. The fact is that China is very, very important and the power manufacturing house of the world. And the fact is that the United States is even more important. It's the financial center and the technology center still. So both have valid interests. And Trump basically started to reset the relationship between China and the United States because China ripped the world off because the Europeans and the Americans were dumb enough to let it happen over the last 25 or 30 years. The Trump era, signifies the end of this whole relationship as it were before. And it means there's a reset going on. The United States is now enforcing its own interests and views China as a competitor. The Europeans slowly but surely are getting dragged along with the United States and take more and more the same position. They say it's the end of free lunch for China, and we are going to treat China now as a normal competitor. So China has a lot of negotiating power now, and the United States has it too. And what does it all mean? It means things are not simple. Neither side can just do something and get away with it. And I think neither side expects that. We are seeing here a recalibration of the entire complex global trade relationships initiated by Trump. And so it's a power game. And it's a game about details. And it's a very nasty, annoying game where we have these big, big moves like, boom, you don't get my rare earth anymore. And then boom, Trump, here's 100% tariffs, take this. But behind the scenes, both sides know what they want. And they have expectations. And there are tons of people who are very smart, including the Europeans. They're sitting there and they're negotiating all kinds of details. And they're using these big levers in public to actually get more of their demands through. Maybe the Chinese want more controls, but not all the way to what they actually said they're going to do. Trump wants less controls. Maybe there's some bartering going on where the United States removes some software and chip controls and return to some rare earth controls. But Trump is dangling the tariff threat on top of it. What we need to know, we don't need to know all the details, but what we need to know is this is all relatively normal. We're dealing with highly rational governments on both sides. Both have very sophisticated objectives and people executing this, and they're in constant negotiations. So this whole thing is a giant negotiation. It is incredibly unlikely to go wrong. What's impossible to go wrong because the cost would be too high. So the takeaway for us from a fundamental level is there's a lot of saber rattling, a lot of noise, but in the end, it's going to get resolved. And neither side has any interest in actually seeing this November 1st day come and Trump putting these tariffs in place. Trump doesn't want that. China definitely doesn't want that. And so I say the same thing that I said in April. Fake news, a lot of noise. This will get resolved. It will get resolved very quickly by definition, because by November it has to get resolved. But the market loves these kinds of things, and I want you guys of a seasonal correction. I said it's a 50% chance. Now we probably get it. We are already a third through in one day. And that's exactly how these things happen. So strategically, don't be worried. It's a V-shaped recovery. We don't know how deep this V goes, if it's over already on Monday, or if it goes down 10%, or if it goes down 20%. Anything can happen, but whatever happens, it's going to go back very quickly. We're exactly to where we are at now, and then very likely a year-end rally. Okay? So as you remember, I said there's a 50% chance of a seasonal correction from September 1st to October 30th. Now it's October 10th. Pretty much in the middle, and we probably get it. And if you say, oh, Joe, you had no idea, you just got lucky. First of all, I'm not lucky. I don't like this. I just predicted it's likely to happen because the market loves this kind of stuff in September and October. So now we have something. And I don't care because I said it's also going to be quick. I don't think there's any significant risk here, long and midterm. I think short term, we have a very high risk of this escalating into a 10% correction. You just need 2 more days, like Friday, and you're there. Right? That's the magic of these corrections. They happen in a couple of days. That's why you can't do anything about it. And as I said, if you have Tesla, Palantir, and all these things, just Google, look up their beta. Beta means if the market drops 10, this thing drops 20, and you can't do anything about it. Right? If Tesla is at 410 right now, and the market actually drops another 10%, you will drop $80. You will drop 3, what is that? 330. It's going to happen if the market drops. What does it all mean for our strategy? I told you, September, October, don't do the following things. Do not trade on margin. Get out of your margin because you don't know what's going to happen. No margin, no short puts, which is pretty much a similar thing. You don't want to be short anything, also not puts. You want to have normal portfolios, ideally just 100% exposure. You can have it 110 or 120% mini leverage if you have enough buffer, but it's dangerous. And then hold on for dear life, hodl, right? Don't do anything stupid. Don't panic. If you panic, you will lose money. Because there's no reason to panic. Don't stare at the stock market. Don't stare at Tesla price movements. Don't stare at your Palantir or your AMD or NVDA. It doesn't matter. Take a walk in the forest and come back in 2 weeks. It's going to be exactly where we are now, but in between, terrible things happen maybe. If you want to be active, buy the dip, sure. I think this is a dip buying opportunity. But what is the dip? We'll get there in a second, but that's my last little tip for today. Buy the dip. Just understand what the dip is. Or take a walk and come back in 2 weeks. No reason to panic. So what is the dip buying? Here is a little bit of a graphic. One of the most important things if you're into dip buying, let's say you're a Tesla fanatic. and you understand the strategic outlook of Tesla and share my view that we are in an incredibly, insanely bullish age of AGI. Tesla is the singular embodied AGI company and will absolutely kill it very likely in 2026. And if not, then in 2027, more or less. Guaranteed. Not investment advice, but you know my thesis, you know my model. If that is the case, you see all these retracements as a dip buying opportunity. So let's talk very quickly about dip buying. When it comes to the dip, this is basically the stock market or your stock, whatever it is. This is a dip. It's called a V. It's a V-shaped recovery, right? It dips down, it falls down, and then goes back up. There's one simple rule I can just encourage you to follow. And that rule is be on the right side of the V. The right side of the V. What is the wrong side? A is the wrong side. What's the right side? B is the right side. You might catch it at exactly the same price, but you don't want to be on the A side. You want to be on the B side. Why? What does it mean? Do not buy into a falling knife because you don't know where it falls to. These stupid things, they can escalate. The market could crash 30% and Tesla could go down 60%. I wouldn't care at all, but if that happens and you just can't know that stuff, if you buy when it's going down, it's like, oh, Tesla's down $40, buy. Well, guess what? It's going to go down $200. And then you look very stupid. So the right mindset here to have as a long-term and strategic investor, like I hope all of you are, fundamentally inspired on fair future value, what are you going to lose? Like you're not going to lose anything. You just sit back and don't do anything. The dip is just the cherry on top. So don't be greedy, don't be panicky. It's like, well, if you miss the dip, you didn't miss much. If you want to have fun with the dip, just wait until it starts going up again. Just wait. Never buy when this thing keeps falling. Wait, and then it dips. And if you get unlucky, you wait until it dips, it goes up, you buy, and it dips more down. Like, who cares? Better than having bought here, right? And then you just wait. So the most important peace of mind thing with these things is you have nothing to lose, only to win if you are a strategic investor who knows what you're doing. The dip is just the cherry on top if you catch it. So there's no rush. Wait it out. Wait. Let it drop and drop and drop. And if you miss it out, if you let it drop on Monday, you let it drop on Tuesday, and suddenly on Wednesday it goes all the way back up where it was on Friday, you think, damn, I missed it. Who cares? Next time. This is a much more healthy attitude than buying on Monday like a crazy person and then seeing your money going down, because this is not very healthy. So be on the right side, just have patience and wait until it goes back up. And that's why we are covering it here. So I will comment on this. So can I tell you if we are already done and we see a rapid reaction on Monday, or if we go down another 3%, another 9%, another 18%, another 30%? I don't know. I don't care, because whatever it is, there will be a rapid V-shaped recovery, because this whole thing is fake news. I hope that was helpful. Stay on top of your trading game if you want to this week, or just take a walk and don't do anything. Just make sure you have no margin. I hope that was helpful. See you very soon.